care to load the shoes from your supplier into into your business. So the cost of transportation is known as the inwards, carriage inwards, right? It's coming into the business, so carriage inwards. So that would be a cost. You would have added that one to it. Do you have carriage inwards from the question? Any carriage inwards? Did we see something like carriage inwards?
No.
No carriage inwards. Yes. It could be that they gave it to them for free, so they didn't incur any cost on the transportation. Maybe free delivery. Yes. So if there is no carriage inwards, and moreover, aside that, it can also happen that maybe when we got into the entity, some of the shoes were not what we ordered for. So instead of black shoe, they gave us yellow shoe. So what do? We have to return it back to them. So we have something called return outwards. We would have returned it to them. Did we see something like return outwards from the question when we read through? So when you get a question, go through the items like the way I did. Capital account, Johnson Selena; current account, Johnson Selena; cash drawings, Johnson Selena; freehold buildings, motor vehicle, plant and machinery, inventory. So you see that when you are going through it, you'll be like, oh, I've not seen something like that. So did we see something like return outwards, where it is going out of the business? You are giving it to our supplier that, oh, supplier, this is not what we ordered for. We told you to give us black shoe. Unfortunately, we didn't. You gave us yellow shoe, and we didn't also check it there. It is here that we saw that we realized that, oh, it was yellow shoe instead, right? So from this question, it means all the goods that we brought were intact, all the shoes were intact. So there is no return outwards, right? Once there is no return outwards, then the summation of these two will give us the cost of goods available for sale. This is what you are coming to sell. Cost of goods available for sale. The cookers, also known as the cookers, available for sale. Also known as the cookers. So what is the summation of these two? What are we getting? Do you have your calculator with you?
Yes, please.
Give me the total.
29300, 29,300.
So 29,300. That is the total, right?
Yes.
Now, this is what you are going to sell for the entire year. That is previous year's shoes plus this year's shoes. That's given as available for sale this year. Now, if it is not compulsory that we are going to sell all these shoes, so there may be closing inventory, right? There may be closing inventory. That is it. You may not be able to sell all of them. So the remaining is known as the closing inventory. So you see, the closing inventory for this year will be the opening inventory for next year, right?
Yes.
Yeah, the closing inventory for this year will be the opening inventory for next year. So the opening inventory we are seeing here is the closing inventory for last year. Now it is the opening inventory for this year. Yes. So there may be closing inventory. So we less the closing inventory so that we know how much we actually sold. Less closing inventory. The total that we were selling at the beginning of the year was 29,000. Now at the end of the year, we realized that we were left with let's say an amount. It means the difference is what we actually was sold. So let's go through the closing inventory. Were we giving closing inventory? Inventory. So the inventory will be 2. The opening inventory is always in the trial balance. This is the opening inventory. The 3,600 is always in our trial balance. And then the closing inventory is in that footnote, additional information. So this is the additional information. Inventory at 31st December 2014, which is the date at the end of the period. So that is how much?
4,100.
4,100. That is the closing inventory. we are going to deduct it so that we want to know how much we actually sold. Because at the beginning we are having 29,300. Now 4,100 was left. So what does it mean? It means we sold the remaining, right?
Yes.
We sold the remaining. So that will be the cost of goods. Cost of goods was sold. Cost of goods sold, or the cost of sales. So this cost of goods sold, if there is wages in the question, you add it to the cost of goods sold to arrive at your cost of sales. But here there is no wages. The wages is like when the goods get into the business. Once the shoes get into the business from the supplier, you see that you tell some boys, yo, please, I need guys who will come and offload the shoes into my warehouse. You see, so those boys, the amount that you pay them, that is the wages. It's like on wages on daily basis, it's on weekly basis, and then it is different from salary. Salary is like a monthly basis, right? Every month you take your salary, but the wages is like instant. You are giving it to them on a daily basis, on a weekly basis, right? And so that cost of giving to those who offload the goods from into the warehouse is not as wages. Yeah, there's no wages. The cost of goods sold is the same as the cost of sales. What we want, you see, cost of sales. That is what we want. I've gotten the final answer. So what is the final answer?
But then your line was breaking.
So I have breaking.
But then
Yes, so I'm saying that. I don't know.
it's still breaking. But I got 25,200.
My line is breaking. Okay.
Yes. Maybe it's my network.
Yeah, check your network then.
It's fine now.
Okay, can you still hear me?
Yeah, I can hear you now.
Okay. All right. So now I'm saying that now we have gotten our cost of sales, because if
Yes.
there is no wages, then mean the cost of goods sold is the cost of sales, right?
Yes.
Yeah. So the cost of sales is what we want, the CP, or the cost of. So now what do? We deduct it from the sales.
Okay.
So give me the cost of sales.
13,410.
No, I mean this is where we get the
Ah,
cost of sales.
the
That
cost
is the
of
cost
sales
of goods available for sale minus
is 25,200.
25,200.
Yes.
So now we have gotten our cost of sales. CP, we have gotten our CP. Deduct the CP from the SP, which is the sales. So deduct the cost of sales from the
Yes,
sales.
13,410.
13,410. So this could have been our profit. But let me extend this. This is called gross profit. Then you add other income. Then you less expenses. And then you actually get your net profit or loss. So yeah, this would be known as gross profit. Gross profit. So we've gotten our gross profit. We are here. What do we do from the gross profit? What do we do? We add what? Other incomes. Incomes. Add other incomes. So do you have any other income in the question? Do you see something like income? Commission received. Income is commission received, discounts received. I'm not sure there's something like that. So let's proceed. So there's no other income.
No.
So then, if there is no other income, what is the next thing? We skip that one. Move to minus expenses, operating expenses. So less operating expenses. So what are the operating expenses? Let's go through the expenses. So from the top, capital account Johnson Selina, current account Johnson Selina, cash Johnson Selina, freehold buildings, motor vehicle, plant and machinery, inventory, purchases, sales, receivables, payables, wages and salaries. Is it an expense?
Yes.
So wages and salaries is an expense. But wages and salaries, is there any additional information on the wages and salaries? It is 4140 in the trial balance. Let's go to the additional information. Maybe there's information attached to that. Anything about wages and salaries. Selena, inventory, provision for doubtful debt is increased. Selena is to be paid a salary of 500 cedis per year. This salary is referring to the appropriation partner salary. Do you remember that?
Yes.
Yeah, the partner salary. It is not the general expense salary. What else? Johnson and Selena share profit. Okay, so it means nothing is affecting the wages and salaries. So wages and salaries is how much? How much is the wages and salaries?
4,140.
24140. What else? Then move to next expense. Motor vehicle expenses. So motor vehicle expenses. Motor vehicle expense.
1,408.
That's what
1,400.
148. Yeah. What else? General trade expenses. They've arranged the expenses for us. General trade expenses. General trade expenses is 1994. What else? Rate and insurance. Rate and insurance. Rate and insurance is also an expense. How much is it? 964. What else? Then you have the cash and bank. Cash and bank is how much? Cash and bank is no, sorry. Cash and bank is not an expense. What else? So that's all right.
Yes.
And then we have something called increase or decrease in provision. So increase in provision is an expense, and then decrease in provision is an income. What is provision in the first place? What is provision in the first place? Provision is when you set aside money to cater for possible losses. At the prudence concept, you have to set aside some money to cater for possible losses. As an accountant, you have to anticipate for losses, right? Rather than anticipating for profits. So if you're anticipating that there might be possible loss, so when it happens, you already know that it will happen, right? You have made provision for that. I mean, I'm making provision that I'll make loss. So when it turns out that you are making profit, then that is a good news. But then if you make anticipate that you are making profit and then it turns out to be that you are making loss, you see that you find yourself wanting, right? Uh, so the prudence concept says that we should anticipate for what losses. So provision is like you are setting aside. It means this money I'll not use it to, I'll not invest this money in the business. I'll put it aside so that when there is any possible loss, I will use this money to cater for this loss. So you see that money that you'll be using, 100 cedis, less 100 cedis. This 100 cedis that you use it, you invest it in a business to generate an interest. You are putting this money aside that you use this money to cater for possible losses. So here, increase in provision means you are increasing the 100. You are adding more money to the 100. Increase in provision, and that is an expense. And then decrease in provision means that you are decreasing the 100. Let's say you are decreasing it to 80. That is an income. Why is it an income? Why is it an expense? Because if you had invested that money into the business, you would have generated interest on that amount. You would have gotten income. Now, you said you will not invest that money in the business. You are putting the money down. What is it? Can I to again? So you can end down. About you can end generating income. They are not generate any income. So you see that if you are putting more money aside, you say you should treat it as an expense because you are losing some money. So it's an expense to you. But if you are decreasing your provision, means you are decreasing it and you are taking the money, you are investing the money into the business, means you get interest, you get income. So that is an income. Do you understand?
Yes, please.
Yes. So decrease in provision means it's an income. Increase in provision is an expense. So let's look at this. Look at this. Provision for doubtful debt is how much?
125.
Is it 125?
Mm.
Provision for doubtful debt is 100, right? Can you see that? Can you see my pointer?
Yes.
Provision for doubtful debt is 100. Look at this. I think additional information is talking more about that. The
Yes.
provision for that will increase. This one guys has even told you that it is increased. So definitely is an expense. Assuming the question was silent, provision for doubtful debt is 125. You will still know that in the trial balance it was 100. Additional information is saying that it has now increased to 125. So increase in provision is what? It's an expense, right?
Yes.
So here, increase in provision. Assuming it decreased to 80, the decrease amount would have come here and it would have added it to the gross profit as an income. So here,
Yes.
increase in provision, 125 minus 100. So what is that giving us?
25.
So that's giving us 25.
Yes.
That's giving us 25. That's an expense, increase in provision. What else? Then I think that's all. But then we have the depreciation as well. Depreciation is also an expense. Do you know that?
Yes.
Depreciation. Depreciation of motor vehicle. I think we have depreciation. Motor vehicle. What is the rate?
25%.
25% of the cost. Where is the cost? Motor vehicle. Motor vehicle, where are you? Motor vehicle. Let's
One
go to the top. Where is it?
1,260.
It's 1,260. So what is that giving us?
315.
315. Then we come to the next depreciation. That one is what? Freehold buildings. Can you see that?
Yes.
Can you see that?
Yes, please.
So the freehold building, that is, what is the rate? 5%, right?
Yes.
Times,
5100.
what is the freehold building cost?
5,100.
5100. So 5% of 5100 is giving us how much?
255.
255. What else?
Planting machine.
What else do we have? Plant and machinery. How much? That is 10%. What is the
1,000.
that is what is it? Not the machine. It's 1,000, right? 1,000.
Yes.
So 10% of 1,000 is 100, right?
Yes.
I think that's all. That's all. Then so give me the total. Give me the total for this. Sum everything up, all the expenses, so that we deduct it from the gross profit.
Okay. Nine two seven three. Nine two seven three.
9373. 9273. Okay, so we deduct it um from the gross profit. They are deducting it from the gross profit. All the expenses from the gross profit. Then whatever you get is your net profit, net after deducting all the expenses.
4137.
What are you getting?
4137.
So that is our net profit. So you see, we are done with the I. We are done with the I. So assuming they had given us this net profit 4137, means we will not go through all this. But then because they've not given us, then they've given us information to get that. Yes. So usually sometimes they'll give you the net profit. So when they give you the net profit, we just prepare the profit and loss appropriation. You are gone. Partners current account, the statement of financial position, then you are gone. Right? Okay. All right. So now let's continue. Let's continue. So now let's prepare the appropriation quickly. Appropriation account. I to the appropriation account. Profit and loss appropriation. Profit and loss appropriation what account for the year ended. For the year ended 31st December 2014. Yeah, I'm sure 2014. Okay. So now we have to share these profits. Profit and loss appropriation. So what is the first item? Net profit, right? We are going to share this net profit. Let's share it. How much is it?
41,371.
4137, right?
Yes.
Yeah. Okay. Then from here, what do we do? Sorry.
Pardon?
From here, what do we do?
You add the increase in capital.
Isn't that
Pardon?
less the
Sorry.
interest on borrowing? Interest capital, sorry. Interest on capital. So yeah, interest on capital, we're giving interest on capital. What is the interest on capital? interest on capital. This is capital account.
Please, your line is breaking.
Capital account. Can you hear me now?
Yes.
Capital account, Johnson, and then Selena. 4,000 and then 2,500. This is the capital account. So, at what rate? The partners have agreed to charge interest of 10% of capital and drawings account. So 10%, right? So Johnson is taking 10% of the, is it 4,000? Of the 4,000, right? Of the 4,000. And that is how much? 10% is 400. And Selena is also taking 10% of the 2,500. And that is how much? 250. I think you are following.
Yes, please.
Okay. So now the total class was 650. 650. This 650 will be less from that. If you less what are you getting?
~3487.
3487. 3487. And then what do we do next? Here we less our partners what? Any partner salary. Did any of the partners receive salary?
Yeah, they just said it was not that one. Selena is to be paid a salary of 500.
Yeah, what?
So
So Selena.
Yeah.
Partner's salary. Selena. So Selena is receiving 500. So the 500 will reduce the profit in the business. What else? Then we come to the interest on drawings, right? Interest on drawings. So the interest on drawings, are we going to add or deduct?
We'll add.
Interest on drawings. Interest on drawings. We have Johnson. So I think that one is also 10%. They said the interest have agreed 10% on capital and then on drawings. So what is the drawings? Amount. Drawings is how much? How much is the drawings?
For Johnson, it's 800.
And then for Selena is how much?
600.
So times 800. Then Selena is 10% times what? 600. So what do you have? This 80 and this 60. So the total should give you 140.
Yeah.
What else? From here, what else? I think that's all right.
Yes. So you get the residual profit.
So how much is it?
$3,127.
3,127. So this is our residual profit. This residual profit will be shared between the partners. So share of profit. Share of profit. How are you going to share it? Johnson, did they give us any sharing ratio?
Yes. 3:2.
What is the sharing ratio? 3 is to what?
2.
2. So 3 is to 2. Okay, that is it. 3 is to 2. So it means Johnson will take 3 out of the 5. I believe 3 it means 3 over 5. Right? It means Johnson is taking 3 and then Selena is taking. So the total is 5. So 3 over 5 times the residual profit, which is 3,127. And then Selena is taking 2 over 5 out of the 5. Then 3,127.
Johnson will be 1876.2.
Johnson is how much?
1876.2.
1876. And then this one is
1250.8.
1, 2. So that's 1251.
Yes.
So the total will give us 3,127. All right, so we are done with the appropriation. Let's move on to the others.
And please, the okay, I made a mistake. It's fine, I've seen it.
Okay. Can we proceed
Yes.
with the appropriation? Sorry,
Yes.
last requirement,
The,
partner's current account.
yes.
So let's prepare the partner's current account. Okay, so the partner's current account will be having the details, Johnson and Selena, details Johnson and Selena. Okay, so Johnson, Selena, details, Johnson, Selena. Okay, so in here we said that the credit side would increase their capital, right?
Yes.
And then this one would decrease their capital. You're talking about the partners, decrease their capital. Right. Okay. So Any balance brought down from the previous year, current account. This account is called current account. Any balance from the previous year, any current account. Yes, we have balance brought down. Can you see the current account there? Can you see?
Yeah, for each
So how
of
much is
them.
yeah?
For Johnson is 1,000 and Selena is 500.
That's the balance from the previous year. Balance brought down. It's in the trial balance. Balance brought down is how much? 1,000 for Johnson, and then Selena is how much? 500. I believe you can see that.
Yes, please.
What else? And we said the current account is having a credit balance. So you see, when I prepared the first one, the BD was at the debit credit side, and then the CD was at the debit side. Do you remember the first one, the first account that I prepared? Where I said the difference, which is the balance CD, was at the credit side, and then the BD came under. Do you remember something like that?
Yes.
So you hear me, current account is having a credit balance. So the balance brought down should be at here. You see, we didn't bring it here. We are bringing it here. All right. This is the debit side. This is the credit side. All right. So now let's go to the appropriation account. All the items that we use in the prepared appropriation account will come here. So now let's go to appropriation. We just do lifting. We just do lifting. Partner salary. Lifting. Yes. So you are starting with the we can start with the interest on capital, or we can start with the partner's salary, or we can start with the interest on drawings. So which one should we start with?
Interest on drawings.
Interest on drawings. Okay. The interest on drawings will it decrease their capital or increase their capital with the partners?
It will decrease their capital.
To decrease their capital because they are paying out of their capital interest. So multi can be super interest. Interest on drawings. And that is how much we've already computed, so we just pick them. Where, how much is it? No, for each of them. We don't bring the total.
80 and 60.
So 80 for Johnson and then 60 for Selena. 80 for Johnson, 60 for Selena. You are done. And now move on to the next one. Which other thing should we look at?
The drawings.
Drawings. Okay. All right. So drawings. What is the amount for the drawings?
For Johnson is 800.
Exactly. So drawings. Johnson 800. And then Selena is how much?
600.
600. Okay. What else?
The interest on capital.
Interest on capital. Interest on capital. Will it increase the partner's capital or it will decrease their capital?
It will increase.
Yes, because they are getting interest on the amount that they contributed. So interest on capital. Interest on capital. How much is it?
400 and 250.
Interest on capital. Johnson 400. Selena, take your 250. What else?
The partner's salary.
partner's salary. So which of the partners is receiving salary?
Selena, 500.
Okay. So the salary, will it increase the capital that she has, or it will decrease the capital that she has, the salary that she's receiving? Sorry?
To increase.
Yeah, so partner's salary, which is it 500? Selena,
Yes.
take your 500. Okay, what else?
Um,
Then the
um,
share of the profit that we are giving them, right?
yes.
The share of the profit. Take your share of the profit. So how much profit is Johnson taking?
1876.
1876. How much is Selena taking? 1251. Any other thing that we can think of? No. So we are going to balance this account. How to balance an account? So we are going to balance this account. Which side is more? So use your calculator to compute both sides and know which side is more. Wherever the shortfall is, that will be where the CD will be, balance CD will be. So which side is more?
I'm calculating.
Okay.
The credit side is more.
Okay, so give me the credit side amount.
3276.
For which one?
Johnson.
Okay, 3276. Here, what do you have?
2501.
2501. So it means that will be the same amount, 2501, 3276. Now the difference will come here, which is the balance CD, the difference, which is taking care of the difference. So the summation of these two will give us what? 880, right? 800 plus 80 is 880. 880 plus what amount will give you 3276? This plus this amount should give you 3276. What is the amount here? Find X.
2396.
2396. 2396. What of this one?
One eight four one.
1841. Okay, so this will be a balance brought down here. 2396 and then 1841. What is it? 1841. So that is it. So we are done with the preparation of the partners calendar. Let's prepare the last thing, which is the what? Is the which is the what?
Pardon?
What are what are you preparing last?
The The statement of financial position.
Exactly. So let's go and prepare a statement of financial position. Uh, Still I. Statement of financial position as at 31st December 2014. What is the statement? We have our non-current assets. Sorry, our non-current assets. We have the cost, accumulated depreciation, and then the net book value. Right. So then we have our Ghana cedi, Ghana cedi, Ghana cedi. What is the non-current asset that we have from the question? What are the non-current assets? Shallow, what are the non-current assets?
The machine.
Yeah, the freehold. These are the non-current assets, the machines, the asset. The asset that goes beyond one financial year, you can use it for more than 1 year. So that's a non-current asset. So the freehold buildings, that what is the amount for that? 5-1. Is it 5-1? Right?
Yes.
Okay. Uh, do you get any depreciation for that? Provision is to be made for depreciation and for freehold buildings, 5%. Okay.
5%.
So they say that we should make provision for depreciation. So how much did you get for the depreciation? We computed for that from the
255.
255, right? I'm sure you have the figures.
Yes.
255. So if you did that, what are you getting?
Four eight four five.
4845. All right. Then motor vehicle. What is the cost? Cost of motor vehicle is 126. 126. What is the depreciation?
315.
315. If you did that, what are you getting?
945.
945. What else? What other non-current assets? Plant and machinery. How much is the plant and machinery? That's 1,000. The depreciation is how much?
10%, so 100.
All right. So that's all.
900.
That's all. What do we have here? Give me this one. This one, for examination condition, if you are in a heat, you don't need to even add. Just work with this. What you are going to use.
Okay. �7360.
I mean, give me this one.
The NBV.
Yeah, net book value.
Okay. 6690.
Then we move to our current assets. 6690. So move to our current assets. The current assets, we have the inventory. Note that we use the closing inventory. The inventory that we are using here is the closing one.
Okay.
So the closing inventory is how much from the question? How much is it? Additional information. Always an additional information.
4,100.
Come again.
4,100.
So 4,100. Then we have receivables. Receivables is how much?
3,960.
3,900. Additional information talked about receivable, right? 3,960. There's a bad debt. Any bad debt will be deducted from the receivable. So the provision for doubtful debt is 125. We use the additional. Note that with the statement of financial position, the additional information, we use the figures there. We use the figures as they appear there on the statement of financial position. So provision for doubtful debt is to be increased. So we less the provision for doubtful debt. And that is 125 as you are saying it here. So if you deduct what I get in, let me do my 3960 minus 125. 3835. Is it 3235? Yeah. So you add it to this, what are you getting? Plus. You're getting 7935, right? Then what other current asset do we know? We have cash or bank. Where's the cash or bank? Cash or bank. Cash or bank is a current asset. A current asset. Cash and bank is also a current asset. What is the amount for that? Cash and bank is 782. 782. Right? So if you want to know the total current asset alone, then that is 8717. Right? That is the current asset. So note that with this one, like the way I gave the
Please, I can't hear you. Hello? 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 Hello?
Yeah, hello. Still not hear. Yeah, hello, I can hear you.
Ah. After the cash and bank.
Yeah. Can you hear me? Can you see my screen?
I can't see your screen, but I can hear. Okay, I can see your screen now.
Okay. So getting the current assets, then we move on to. I'm sure you are familiar with the items in the non-current in the financial position, right?
No,
You are not familiar with these items.
just the non-current and current. That's what I remember.
Is it just the current and non-current words?
Or you mean like what's under each?
Yeah, the items under each of them.
Ah, yes.
So the current liabilities too, we have the payables, right? We have the payables. So where is the payable? Payable from this question. How much is the payable?
3,670.
So the payables is 3,000. So from this question, it looks like there's no other liability apart from the payable. So I can just bring the payables here. Since there is no other, I could have brought all of them and then added and then deducted them from the current assets, right? So 3670. And then what else? So deducting it from this, you are getting working capital. Current asset minus current liabilities equal to working capital, right? So the whole thing is about asset minus liabilities equals equity. So asset, under asset we have non-current assets and then current assets. Liabilities do we have non-current liability and then current liability, right?
Yeah.
So if you deduct it, you are getting equity. So here you can see current assets and then let me do a non-current liability and then non-current liability. So current assets minus current liability is giving you equity or working capital. Capital is the same as equity, right?
Yeah.
So that's why when you are deducting I'm deducting the current liabilities from the current total current asset figure. I'm getting working capital, which is the same as equity in a way. Do you get it?
Yes.
Okay, so now what are we getting? Then we have the working capital. So the working capital is how much? Deduct it from this. You are getting 5047. Right. Now I add this working capital to my non-current asset figure 6690. If you add it, what are you getting? 6690 plus 5047 11737. So I'm getting 1111737. That is one of my balancing figures. That is one of my balancing figures. So that is the net assets. Then now I come to finance by how did you finance it? Capital. We finance it by capital from who? From Johnson. We finance the business by capital from Johnson and then Selena. Capital from Johnson. Johnson, how much capital did you bring? Capital from Johnson is 4,000. Johnson, you brought 4,000. Okay. Selena, how much did you bring? You brought 2,500. Okay, then financed by capital and then current account. Current account, Johnson, how much did we get from you? Selena, how much did we get from you from the current account? We prepared the current account. Did you see that? Where is the current account that we prepared? What is the balance brought down from Selena? Balance brought down from Johnson. Johnson, how much did we get from you? Balance brought down.
2396.
2396. So Johnson, we got 2396. Selena,
1841.
1841. And then, so we finance the business by the business is financed by equity and then debt. So the equity part is current account, capital is the equity part. Now, what is the debt? You finance the business with loan from the bank and then equity. This is the equity. Now let's go to the loan. Where is the? Did you get any loan from the question? Any loan? Yes, we got loan. Selena gave us. Selena, you gave us loan of 1,000 to finance the business, to grow the business. Okay. So loan from Selena to finance the business. So add loan. Add the long term, and of course it's a long term loan. How much is it? How much is the loan?
100 cedis.
Is the loan 100?
1,000.
1,000. So that is it. So I think if you sum all this up, you should be able to get the amount that we had, the balancing figure. What are you getting? This amount should tally with this amount. It should tally with this amount. So what are we getting?
11737.
11737.
737.
This is means you have balanced the account. And this amount is known as the capital employed. Agbena. So that is the end of the partnership account. That is the end of partnership.